Thank you, everyone, of course, in the crowd for joining today. As you probably know already, I'm Hunter, one of the community managers over here at Off-Chain Labs building Arbitrum. And today we're very excited to be speaking with, BarnBridge, BarnBridge specifically Tyler, the co-founder of BarnBridge. And we're going to be talking about a bunch of stuff. If you're familiar with BarnBridge, that they, previously existed on Ethereum, still exists on Ethereum, obviously. But we're going to be talking about V2, the DAO, a bunch of really fun stuff, and of course they're moving to Arbitrum. Hopefully, I didn't front run you on any of that stuff, Tyler. But how's everything going?
It's good. It's been a crazy week, but so long as the FTX like debtors today don't come back as being anything outside of worse than what all the FUD was through the week and assumptions, then I still feel pretty good about everything.
Yeah, man. I mean, we can only hope for the best, especially at this point. So, fingers are definitely crossed there on that stuff.
Yeah. I mean, the good news is I think that a lot of this stuff has shown the need for decentralization more than ever. Like, obviously, we have to convince regulators of that as an industry. But I'm optimistic on the long run because everything that all of us are building, like we have companies, we have DAOs, we have business models, but ultimately the underlying tech stack is something that's been in development for a long time and it's ultimately morphed. And things like Arbitrum make it possible to do things on a decentralized tech stack that you ultimately couldn't do in the past. And so over the course of time, I think that people tend to be probably optimistic in from a crypto perspective, and there's good and bad that comes with that. One of like the underlying bad things that comes with optimism is natural expectations for the speed at which things get done. Like if we're talking on this application on Twitter, which ultimately took a very very long time to build, and there were a ton of iterations into technology that ultimately didn't take off. Where even this thing like Twitter Spaces that we're on right now, um, that was like Clubhouse before, and Twitter had a better platform for it, so they ultimately rolled it out. But they had like a basis in which they could ultimately have tried that. But there were probably billions and billions and billions of dollars that were put into failed things like Twitter Spaces that ultimately didn't take off. And that probably happened over a 4 year, 5 year period. So I think with the optimism that comes with us crypto people, I think some of that comes with unrealistic expectations for how long it takes us to run like the guts of the entire world economy through this particular tech stack. I think people want to see it in like 2 or 3 years for the sake of their bags, but realistically, like that's a pretty ambitious endeavor. Where I'm just using one minute detail, like something like Twitter Spaces and how it rolled out over a period of time, how much that cost. But if you're talking about running the entire global economy on the rails that we're ultimately putting up, where um, Arbitrum obviously is going to have I mean, I'm a believer in Ethereum. So like Arbitrum, I think will be a natural scaling layer of that. But you're talking about probably 15, 20 years for that to come to, fruition. It's not like we can just flip a light switch and the entire guts and rails of commercial real estate and all homes and insurance and all indexing and escrow for all of those types of things and land titles are all put on chain. And that's just like one industry that's going to be transformed by all of this. So I guess what I would say is in the short term, I think we can all be somewhat, I don't know, bearish or concerned about what happened. But the truth is, I think that this and even some of the issues that are happening with Twitter right now are showing that like we need this technology as a human society more than ever. And those regulations are really, in my opinion, what I would say short term concerns that would affect our like short-term bags. But the technology will continue to get adopted and will continue to grow. And so if you're looking at this on a 15-year timeline, um, no matter what happens today and over the next coming weeks and all of this contagion, it's hard to not like at the aggregate be macro bullish on like a 15-year time frame.
100% agree on that. I mean, and frankly, I think the hardest thing is kind of like what you kind of alluded to there, is just kind of separating like the whole kind of like hype and narrative that a lot of this space drives, that like everything is coming like now and everything is coming tomorrow, versus just like kind of supporting your fellow builders and knowing, hey, like these guys are building stuff that's not supposed to come out as quick as possible, but stuff that's supposed to be sustainable and secure, so that you can use them 15 years plus in the future, right? I totally agree with you on that, 100%.
Nice.
But that being said, love that kind of introduction, by the way. Great introduction into BarnBridge. um, I think for those who don't know, maybe we can just start off. What is BarnBridge? How about that?
Yeah, absolutely. And I think even on the thesis that I was talking about it, when we get to like, what is BarnBridge doing with Arbitrum, I'll come back to the thread I was talking about earlier, which is like kind of future planning. But let's just get into what BarnBridge is. What BarnBridge is currently is somewhat different than where it started. Um, and ultimately, that's because we came out with numerous products, and there was one that ultimately had substantially more traction in the market. And it's an area that I think the market really hasn't quite figured out and is still pretty underserved. So we started out as a risk management protocol, and risk management can be pretty encompassing when you're talking about um, financial services, right? Like that can be anything from insurance to hedging instruments like GMX, which is what's on Arbitrum. That's ultimately a risk management platform. And so I think that we were really the first. So let me back it up really far for people that don't even, that maybe are casually following Arbitrum or just trying to learn about crypto. So BarnBridge is a DAO on Ethereum's mainnet that runs a protocol, and that protocol offers financial risk management tools. Ultimately, in finance, you have pretty much four functions. You have the ability to buy something, sell something, borrow against something, um, and then I guess the fourth would be like repay that. But you could also just put any type of like hedging instrument there. But ultimately, they all kind of bubble up to the same things, like those four core functions. Um, what BarnBridge is it's a permissionless protocol, meaning me nor anybody else in the world has full control over it, um, which is a good thing in the sense of what happened with FTX. Like I'm the co-founder of BarnBridge. Um, I probably have the most control over the protocol in terms of the amount of tokens that I have, but I do not have the ability to affect or direct users' funds on the platform, um, and ultimately put them in places that people won't actually know where they are. So, getting into this, just kind of dumbing it down as much as I possibly can, it's a permissionless protocol that a DAO or a group of people that own the bond token control, that determines where we lend money out in the Ethereum ecosystem or the Arbitrum ecosystem, or even some of Arbitrum's competitors in L2. Ultimately, wherever there are money markets in crypto, we can ultimately lend into those protocols. And so, what BarnBridge currently is now, the one piece that we think is underserved in the market is the fixed income component of DeFi. So, in traditional finance, DeFi pretty much runs the world. And it's not only so boomers can put that into their like 401ks as a hedge against inflation. So like as you get older, maybe you have 80% of your money in bonds and you hope that they beat inflation so that you can live out your money in your retirement. The other reason that fixed income is so powerful in traditional finance is because of how like the real business world works. Um, Ultimately, if you have X number of employees, you have X number of debt that is either subsidizing them, or you know that you, on top of those employees, have X number of cost of interest payments in order to pay for all the capital equipment. That's pretty much the way that the whole world runs. It's very hard to run an entire world financial system on the basis of variable uh, income or variable annuities. Like once you have size and scale, you ultimately want to lock in manageable levels, and then you run risk models on the deviations of those manageable levels, right? Like you can't just be like, oh, we were expecting 50% interest rates last year, but they went down to 2. So everyone from people that handle corn futures, if you're a farmer, to lumber futures, if you sell lumber, they do this with gas for airline companies. Um, Pretty much any business is trying to ultimately lock in costs at some set rate so that they can run their business without having to play the game of financial markets. So being able to fix something and hand that risk off to other people, like in investment banks around the world, that's something that every single business that's doing over $1 million in revenue is doing in some way or another. Um, and so where that exists in DeFi is the largest things in DeFi right now are ultimately capital markets where the rates of return are variable. That's an extremely nascent like start to how capitalism or how financial markets work. So it's natural that that was like the first thing that ultimately came out. Fixed income is something that lives somewhere. It's hard to say whether it's underneath or above, but ultimately somewhere over that there needs to be people that can ultimately say, hey, I'm willing to take the risk on this side so that these people can lock in a fixed rate on this side, and I'm willing to be the smart person in the room that figures out how that works, and I can then lock in a profit. So, and really dumbing this down, BarnBridge is a protocol that allows users to lock in a fixed rate of return on a capital market. So any variable interest rate, whether it's coming from an AMM or a trading platform, whether it's coming from uh, the the funding rates on GMX, whether it's coming from Aave or Compound, which is a capital market, we ultimately have a system in place where we are pricing that and ultimately allowing them to lock in a fixed rate of return against all the variable rates of return that are being offered in the market. There's a lot of stuff that goes along under the hood that gets us to that point, but that's ultimately our main offering.
And just so there's a little more color there too. So BarnBridge V1 is currently on Arbitrum, and there are a couple, I guess you could call them pools there. Um, and today's kind of, I guess, topic of conversation is more so around uh, the governance mechanism kind of being deployed to Arbitrum as well as V2. Am I right on that?
Yeah, 100%. So the old the I would say BarnBridge V2 is drastically different than BarnBridge V1. I won't get into all of the details of it. The current version of what is on Arbitrum will probably be sunset over the coming quarter or so. It's going to take time because there's like money in those pools. We can't actually shut those pools down, so we have to manage it at the front end for how people actually access all of that. But I think the too long didn't read is the the number one thing that Terra Luna showed me, at least, is a lot of people say that there's no market for fixed income in DeFi, and that just categorically isn't true. One of the reasons that these centralized lenders were able to get so large that we're in max pain right now, as well as Terra Luna was able to get so large that we're in max pain from June and still dealing with that is because there is an inherent demand, both for businesses as well as traditional financial institutions to get access to the yield that's coming in DeFi, but it's packaged in a fixed way. And there's all sorts of stuff that happens off chain in terms of repackaging this stuff. And there is where it all got sketchy, right? But the ability to lock this in on chain and have market driven fixed rate mechanisms, I think there's a huge, huge market for that. And that was probably the signal in the noise in all of this is people kept saying that their fixed income's no fit in DeFi. But the real reason was because everybody was going to these centralized lenders that were running Ponzi schemes and they were extremely unsustainable. And the on-chain DeFi being completely transparent couldn't keep up with that. There was no way that they could print more of their token or hide some of these things. So naturally, as these centralized lenders and people doing kind of sketchy things start to fail, it will reprice it down to where the market actually is. And so there will ultimately be an influx because I think once people recognize that, okay, this is fair, this is where the levels are, then there's still demand, right? That money needs to go somewhere, or at least the demand, because I think a lot of that money ultimately blew up chasing some of that stuff. So going forward, I won't get to what's like currently on Arbitrum because a lot of this stuff will come out over the next month, and like we'll integrate pools directly on Arbitrum because there's a ton of yield across Arbitrum where you can go put up money. We ultimately can take any of those variable yields and allow you to lock in a fixed rate of return. The benefit, so let me just get that out of the way and let me hit your question on head on. So the benefit to Arbitrum or any L2 from BarnBridge's perspective, and a lot of this is where I was saying in the beginning, this technology is going to progress over a period of time. However, the advancement of this feels so fast in the moment a lot of the time. And sometimes in a bull market, it's very difficult to make moves like say, hey, okay, let's move our entire DAO over to an entirely different network or roll up of the network that you're currently on. Like if MakerDAO was to do that, it would be very difficult because there is so much money that's inherently in their system. I view that as a risk long term, and I'll get to that in a second. But the two reasons that Arbitrum is drastically superior for fixed income than Ethereum mainnet is when there are a lot of transactions on Ethereum mainnet, for the average user that just wants to lock in a fixed rate of return, well, if you're at like a 5% interest rate on $100 deposit, it costs $5 on a low gas day to deposit. It costs $5 to withdraw. Ultimately, you're not making any interest, right? On $100 deposit, you're making nothing. You're losing 5% in order just to even get access to that yield. And so, and $5 gas fees on deposits is nothing. Like when Ethereum's extremely active, Arbitrum, on the other hand, is next to nothing, right? So the main purpose of me wanting to move our actual products to Arbitrum is democratization. So before, I think I did the math on BarnBridge V1, which was probably was the first legitimate fixed income protocol to ever launch on Ethereum. So there was, we were the first people to do that. There was code debt. There was ultimately like non-capital efficiency in the way the smart contracts work. So it was more expensive than it probably needed to be, but it was as good as it could have possibly been at that time. But I think that if you had to deposit somewhere around $1 million in order to justify like a monthly return, like if you just wanted to go and get 1 month of fixed income, someone would have needed $1 million for it to have made sense or be capital efficient. Well, once you go to Arbitrum, the fees drop drastically because of how roll-up technologies work. So you don't need $1 million to do this anymore. That number drops drastically. And so the more people are going to be able to use the BarnBridge protocol when it is on an L2 than if it was on mainnet. Larger financial institutions may want it to be on mainnet due to security reasons. So fine, if you're doing $100 million transactions, you can do it on mainnet with people that are doing $100 million transactions. I think that's ultimately where Ethereum L1 extrapolates to, is kind of state level or interbanking level transactions, or at least settlement of those that they do on their own permission chains. But for the average everyday user, Ethereum mainnet isn't going to work at scale. Another major, so that's on the product side. That becomes drastically more important when you're looking at the governance of the DAO itself. So, BarnBridge, because of the way that we distributed and the time that we did, we have one of the more distributed DAOs that exists. Like if you go on Dune Analytics and look at the breakdown that doesn't even show the millions of users on Coinbase, um, it it was very it was it was done very, very evenly. That ultimately nobody took a major chunk of the tokens. We wanted it to decentralize at the onset. However, for the same reason that the protocol, it's not really capital efficient to use it on Ethereum's mainnet, I think all DAOs should really start looking at L2s very seriously, because this bull market, gas fees for average transactions got up to, 3 figures. Well, if this technology continues to grow, uh, really the only people that are probably going to be using mainnet are massive financial institutions that want to print a query of transactions that gets verified as like an array of transactions. Then also uh, maybe like interstate actors, as well as these roll-ups themselves. Because if you extrapolate like how many people that actually use Ethereum out of your friends and family, like people, I think on average, 50 people in real life, like my number would be biased because, I was so early in Ethereum and got my whole family using it. But for the average person, I'd say like you got 50 friends, maybe 5 of them use it. When that number's 50, those triple digit transactions are going to be $5,000, $6,000 per transaction. And you can't run a governance system off of that in a democratic way. Like imagine if in order to vote for the president of the United States, you had to pay $5,000 in order to do it. That just doesn't work at scale. And so the main reason that we're moving our DAO to an L2, and I mean, I could get into all the reasons, but I don't want to trash on any of Arbitrum's competitors. Let's just say that we did a lot of research, we did a lot of work, and we ultimately picked Arbitrum, and for a lot of reasons think they're the best solution, and their team's been nothing but awesome to work with. With that said, though, I think it's existential that we do go to an L2 before the next bull run. It's easy to do right now while there's not a ton of people paying attention. But what fears me the most is when I look at the cut of the people that own the bond token before. Yes, it was extremely decentralized, but that means that some people only had 4 or 5 bond tokens. Well, in order to vote on every transaction on the entire DAO, that was worth more money than their entire bond token was worth. And so at the end of the day, the way to fix that is to try to get the number down as opposed to trying to pump the price of the bond token in some way to justify it. So naturally, if you assume that, these things are ultimately going to be where, yeah, they're $5,000 or $6,000 and they're just confirming roll-ups on Ethereum's mainnet, and it becomes the settlement layer for all these financial transactions and roll-ups that are happening on top of roll-ups and shards off of that. then naturally a lot of what is on Ethereum in the next bull market, if it 10x's again from here, a lot of that is going to become dust. And so ethically, I felt like we should get it to a layer two, because a lot of those users would never be able to move their money over, call it 5 years from now. And in the next bull market, we're going to be way too busy building other stuff to focus or worry about where the DAO is located. So I saw it as an opportunity when gas prices are cheap to be proactive and put it on a layer that we mitigate that for a lot of our users and keep the system democratic.
Yeah, no, I totally hear you there, and I think it's actually a really good point to bring up, especially because, again, I mean, we spoke about it earlier, but I think the space is focused on very short-term thinking, and we kind of forget like the reason for a lot of the things that we do. For example, like right now, if you look at Arbitrum One, even Arbitrum Nova, our newest chain we released, both of the prices for transaction fees are actually kind of similar. Nova is still like much cheaper because of we keep data off chain there, but like they're roughly similar right now. But come the next bull market, come like even more and more adoption like we were seeing last year, um, there's going to be a real big difference, especially between those two chains, and then even with obviously Arbitrum One and Ethereum mainnet. So it's like the work being done right now that's also kind of pushing EIP 4844 on Ethereum, and just making sure that like we're like really crunching the fees on layer twos as much as possible. We don't need it right now, but like we're gonna need it like maybe call it, I don't know, like hopefully a couple months, a year or so. And I think it's definitely smart to be proactive from that standpoint, to just say, hey, let's move everything over right now when everything is low and smooth, so that come the next kind of cycle, it's pretty much just clockwork from there.
Yeah, well, I think it's probably more existential for y'all to be future planning like that. Um, I think for me it was more. I think one thing people don't realize, and this may be why people use centralized exchanges, and a lot of the. I think one thing that's extremely bullish for Arbitrum, um, is how many of the cross chain bridges have gotten hacked, but those are ultimately like L1 to L1. Since Arbitrum's a roll up, it adopts most of the security of base layer Ethereum. And so it's far safer to transact on. So as Arbitrum becomes better and better, I would actually encourage people to start using like Gnosis safes on Arbitrum, very similar to how they use like custody storage. Because the concern that I have about BarnBridge's DAO and people that have very low amounts of governance but still have say at the aggregate, if they're not completely priced out of having from being able to have say as a group, ultimately the same thing's going to happen to very small bags on Ethereum. So you got like $1,000 on DAI and this random protocol. We don't know when this new influx of users is going to come. There could be some killer application that comes tomorrow, and it ultimately kind of freezes the ability to transfer funds in a meaningful way on base layer Ethereum. So for people that have, larger bags, I'm not bragging, but like put me in that category just because I was in the industry early and I got into a lot of this early. It's not as much of a concern for me, but if I had a $10,000 bag spread across 5 different protocols, at some point in the next 5 years, I would be concerned that it would cost me more money than $10,000 to get that off of the base layer. And I think that's something that a lot of people don't realize, is how existentially important these rollups are to the existence of Ethereum's future.
Couldn't agree more on that. Um, so then, okay, let's say I'm a BarnBridge user, an existing one. I've been using it on Ethereum for a while now. I'm slowly realizing I'm going to be priced out, and I want to start moving my stuff over to a much more, you know, much better environment for me, essentially. When can I expect V2 and the DAO to fully go live on Arbitrum One, or is it already live?
Well, actually, it is already live, but we don't have the front end set up. The actual products that you can use will be launching like this year. They are live on Ethereum's mainnet, but since it is a fixed income offering, there's epochs, right? So like it's a month, like you ultimately go in every single month, and so we've integrated or built integrations to numerous things that are on Arbitrum. Like we have 6 or 7 integrations that are under audit right now. While we were testing BarnBridge V1, we wanted to keep it in what we deem to be probably the safest possible place to put your money in DeFi, which is Ethereum mainnet using Aave or Compound with the DAI or USDC token. The reason that that is considered safe, though, also comes with the fact that you're making, 89 basis points or 0.89% on your money. There are places that you can get much higher yield on the roll ups. And so ultimately, we have all of that stuff under audit. And the way that our DAO will basically work going forward is we'll be voting where we allocate funds across numerous systems. So, like, we won't only have products on Arbitrum. We'll still have them on mainnet. We'll still have them on Optimism. We'll put them on, the ZKs that ultimately get launched. However, Arbitrum will exist as our command center that the DAO determines where these funds get allocated to. And so naturally, we need a couple different originators outside of just, Aave that we're integrated with. And all of those are under audit. In terms of our actual DAO, uh, we can't get rid of the DAO on Ethereum mainnet. So we did a vote. We moved all of the money into a multi-sig via community vote. We're custodians of that for the moment. We will move it into the Arbitrum DAO and launch it. Actually, we didn't this week just because I think in the noise of everything that was happening, Arbitrum, something happened yesterday, so we just said we'll continue to test it for an extra day. So it probably, ironically, would have launched today, but I think it will probably launch Monday or Tuesday. I don't know. My devs are going to shoot me if they hear me say that, but it's going to launch next week. I actually thought it was going to launch this week, but we're close. I mean, it's already all past audit. We've been auditing this thing for months. We've been working. We use a very similar system to what Olympus is about to be rolling out. We worked in very close conjunction with them. So yeah, we've been building this governance system, which I think is extremely awesome and pretty cutting edge in terms of how governance works in DeFi. Uh, but yeah, long story short is it's been a long time coming, but it will most likely launch next week.
I'm truly interested because I feel like obviously we speak to a lot of different teams, and all of them, I mean, including ourselves, are all at different steps of decentralization. How close would you say, or I shouldn't say that we're close, but like how far along in that spectrum of decentralization would you say BarnBridge currently is? Because I feel like the governance is a really big part of the conversation whenever BarnBridge is brought up. So it seems like you guys actually have made quite a few leaps and bounds towards almost fully decentralizing, if that's even a thing. Love to hear your thoughts on that.
Yeah, so decentralizing, I guess, he could almost view it as like a legal term. And there's like lawyers that specialize in that, like the decentralization of networks, and I'm not one of them. So I'll bring this up more in like a non A16 lawyer, it's a relative term, right? Everything, there's no such thing as full decentralization, and there's not really such thing as lack thereof. Like even dictators, like the people can overthrow them, right? It's happened like with the French, like killed Marie Antoinette or whatever her name is. There's also no such thing as like full decentralization. Even if there was, like there's centralization of like networks and human power that can stop things. So like, let's just say like literally or like philosophically, this is a it's relative, right? With BarnBridge, we set out to be pretty extremely decentralized or like decentralized focus from the very beginning. Um, my co-founder Troy and myself, I mean him much before I did. He's really the one that got me on it. In like 2019, when no one was paying attention in crypto, we were in New York, and he was ultimately trying to build a DAO to decentralize like media services. Um, I mean, that's a whole can of worms that I could get into. I think he actually talked with y'all last week on a lot of the stuff he's doing with Graviton. But ultimately, we worked with Kane Warwick from Synthetics, and we all kind of together came up with this concept DAO first. And I was the one that named it DAO first. But the concept was we would launch without having a legal entity. We would launch as a DAO and then ultimately distribute the governance of that DAO as far and wide as we could. And then um, once we had the protocol running long term, we could ultimately theoretically like build companies on top of these things. I would say like where we are, uh, it's interesting because like really two things happen that I think damaged BarnBridge's decentralization efforts, however, did not in any way like destroy them. Um, so let me preface this by saying I think if you look at the actual cuts of who has what in terms of BarnBridge, it is one of the more decentralized DAOs in all of Ethereum, all of crypto, anything in terms of like percentages. Like Ethereum has more holders and is ultimately more decentralized. Some of these other DeFi protocols may have more holders. They're not as decentralized, meaning, you know, there could be three people that ultimately run 30% of the entire, you know, they have the entire stack. Um, so I would say that I think because of our focus and our adherence to it, we're probably substantially more decentralized. Probably, I would even say top 10 in DeFi and Ethereum on like a percentage basis. If I had to guess, I haven't done any analysis on that. So please don't like reply guys come like shoot me for saying that. But I would say my hunch, and it's an extremely strong hunch that I would say with 80 to 90% conviction, we're probably top 10 in DeFi on Ethereum and the rollups that are associated with that. The two things I think that we have to work through going forward uh, are the mechanism that we use to distribute our DAO. We used it after YFI. It was a proof of capital allocation, which is ultimately what we all call yield farming. That got gamed by numerous groups. And the intention originally was that the little guy could put up money and ultimately get some of the token. Unfortunately, like large money came in and stacked the pool. I guess the good news is that they dumped the token, which then allowed, you know, people a lower entry point, which is important because I don't want to talk about the price of bond, just in case there's any regulators on this call. I want to talk about this concept as at aggregate for all of crypto. Prices um, affect decentralization. Um, when your protocol launches with a crazy high valuation that people had a ton of money to stack into in order to get access to it, and because it's permissionless, you can't stop that, that damages decentralization. So naturally, as prices drop in bears, people get lower entry points, and they get the upside to be able to like believe in that project long term. Like when I went into the Synthetics Discord after they had came over from like the Haven Telegram, there were only like 300 of us, which is where that Spartan meme comes from. Um, well, a lot of us were in there and ultimately got in at a very low price point and, believed in the project and started telling other people about it, got excited about it, and then it decentralized from there. However, the opposite can happen as well. This is what's happened with other DAOs that I've been attached to, is that the price drops so substantially that there's no buying incentive. A lot of people that were kind of true believers, their bags matter, and they get pissed off and leave. Maybe there's only 10 people there, and those 10 people end up saying, well, I still believe in it, and I go buy the whole supply, um, between me and my 10 friends, because it's not worth anything anymore, and we build it back over time. So both extremes of this pendulum can damage decentralization, no matter how ethical your approach was. So there is no like one way fits all or right way to do this. I think that in order to decentralize a protocol, I mean, even to the point of like Ethereum, right? Like the the US, China, and the BRIC nations could all come together and decide to buy up all of Ethereum and try to run all the nodes. Like, I'm sure that it would be fought against heavily and it would cost them a lot of money. They'd most likely win in the end, right? So I think that it's always going to be this pendulum, or I don't know if that's the word for like the thing that kind of swings back and forth, but you're always going to be trying to optimize for decentralization, and you just want to know that the people that are building around you in this DAO are ultimately dedicated to that. Um, and there's a lot of misconceptions that come with that, but I'll kind of just end it at that to say, I think as of this point, I've kind of discussed some of the things that I think went wrong, where I think we could be more decentralized, and I want to strive to be to that point. I think with that said, with an asterisk, I think we did far better than other protocols in that effort, and the job's not done. We have to continue to do that until, you know, one day all the people that originally were, I mean, one day all those 300 people in the synthetics Discord aren't going to be there anymore. Is synthetics still around, or did they leave because of that? The success is that those 300 people have all moved on in their life, and now synthetics is ultimately so big that those 300 people aren't needed anymore. I'm hopeful that that's the outcome for BarnBridge as well.
Yeah, no, I mean it's a very interesting take. I think it's definitely not something I think that's talked about much, especially in a space where like we really try to drive and value decentralization. Because I mean, I guess there are many different ways to approach it and how to tackle it, both from like progressive decentralization and just doing it, just trying to kind of do it from the beginning. Um, I guess I figure like one of the things that um, I kind of hear sometimes about projects that are kind of deep into their decentralization process is like kind of efficiency going down, because all of a sudden, while before maybe a little more centralized, there were a lot less kind of just thoughts and opinions that had to be kind of taken into account. But as you progressively decentralize and as you have more and more holders and more people's opinions kind of coming in, there has to be a way, I guess, for all of those opinions and voices to be heard, and I guess to a certain extent, for a decision to be made based off of that. Have you seen kind of any of that stuff with BarnBridge over time? Like, do you think like
The
you know,
answer is yes, but I think
go
it's
for it?
overblown, like extremely overblown by like armchair philosophers that like are sort of unwilling to admit the way the world actually works. So like DAOs are not supposed to be like direct democracies. They're just they won't, if that is what the outcome is, like eventually I'll leave this space because like it's not going to work. And what I mean by that is uh like okay, direct democracies turn into mob rule. And we've seen that with a lot of these DAOs. And I think a lot of that is like a fundamental misunderstanding that we're fighting through, even, I guess, politically across the entire world right now. But it's not a functional way to run anything. Ultimately, yes, we had a massive problem with that at BarnBridge. I think Olympus has had pretty documented massive problems with that. And a lot of that has to do with political theory, But at the end of the day, some of this is just going to play itself out, and there's going to be a natural outcome, which I would say that I would think that I know to be true. Because we've seen it through history. This is like a 2,000-year-old conversation. Like, originally, democracy was invented by, I can't remember if it was like Cleinices is the father of democracy or if it's Themistocles, but the one who originally came up with the concept wasn't the one who implemented it. The one who implemented it was like a naval officer that went and fought the Persians in the Straits, and ultimately the Persians beat them on the land. So like when they got back, they had destroyed their entire naval fleet and ultimately won, but like the king and the queen and all the people were dead. So this naval commander ultimately said, "Okay, I have um, like I don't want to be the ruler. I'm like a general, and I was from means, and these people are angry. There's a mob here." So he came up with ultimately the democracy that is mob rule, and he went down to the middle where this stone is, and he went and ticked all of these signs, and these signs ultimately um, determined how rule happened. Well, that broke. It's never worked in history for more than 15 years. We've tried it time and time and time again. Um, Ultimately, just mob rule doesn't work. So, like a man came along later named Plato. Uh, Plato wrote a book called The Republic. He had a um, apprentice named Aristotle. And, most of what we say in the West, we write in God we trust on the dollar. But I think we can call it Aristotelianism the same way that like Confucius or, Confucianism is thought to be a religion. Well, like there's no God in that religion. It's just like a way of thinking. Well, Westernism's Confucianism would be Aristotelianism. The way that was ultimately championed, Aristotle had a tutor who was the king's son. He was a Macedonian king. That son's name was Alexander. He became Alexander the Great. He went and basically dominated the Western world. And ultimately, that's where Westernism came to be. Well, ingrained in Westernism is a concept of the Republic. Well, the Republic basically says, because they learned, from what happened with Cleinices and Themistocles experiments hundreds of years earlier that had then influenced Plato to write this book that then came Aristotle and Alexander the Great. Uh, it's it's just consistently failed this concept of mob rule. Even after the Roman Empire, collapsed later, they went and implemented a republic, which went and ruled longer than the empire did. I mean, this is like what Star Wars is about. So like ultimately, I think that right now we have a lot of idealistic people in crypto that want to see direct democracy in action. I am just sad to tell everyone it's not going to work. But ultimately, the DAOs that do say, fine, we will enact elected representatives that will oversee these DAOs. Yes, there's centralization that ultimately comes in with that, but that's, I mean, the United States government is one big DAO that manages 400 million people. We can argue about how efficiently it's done it, but it's done it more efficiently than any other system in the world up to this point in terms of building a nation. So I don't think that we have to throw out everything that we know about governance of humans because we invented this cool new technology that makes it drastically more transparent in how these votes and capital all gets divvied out. That's the part that's broken about our current system. It's the opacity on how these things ultimately get delivered, how these votes get counted, how money gets given out, where the money goes, where is your tax money, from nonprofits to the government itself to companies. Well, so with that said, I don't think DAOs are broken. I think that the idealistic people that implemented them are going to have to go through the motions to learn what we've learned over 2,000 years of society of how human governance works. And I think these systems will eventually start to adopt the better systems that reflect that. And that doesn't have to happen from this mass, you know, contagion of everybody having this eureka moment. I think that it's ultimately going to come from some of the shit's going to work and some of it isn't. And the stuff that isn't is going to die. And the stuff that does work is going to work. And then that just becomes ultimately what pushes things forward. It's just a natural progression.
First of all, I got to say that was a great Eli 5 kind of history lesson there. So I'm going to thank you for that. But no, really, but that was I definitely hear you. That was very very insightful, and I think context was definitely key there. So uh, I think that people in the audience really appreciates that. I think just to kind of like round it out here a little bit, and before we head to community questions, um, is there anything that we missed though for in terms of like future plans for BarnBridge V2 and Arbitrum? Yeah, that could be ecosystem collabs or even any any more technical deployments you guys maybe are thinking about.
So I would say we're probably going to start collaborating with a lot of the Arbitrum community very closely, just because we have put a lot of time into the like governance work that we've done, and I think that some of those components are going to get uh, adopted in other components. There's a, I would say, 99% likelihood that we're also going to merge BarnBridge with the Fiat DAO team, which we spun out probably a little bit over a year ago. And they also have some really cool governance components that are coming. And a lot of when I talk about BarnBridge, I talk about the DAO because the DAO is like what is most important. It's what runs the protocol. However, from like a pure integrations perspective, one of the reasons that I really pushed our community to move to Arbitrum was because of how good the network is, in terms of like actually being able to like talk to someone and get introductions to other groups. A lot of the ways that we'll actually work with groups in the beginning will be pretty permissionless. So like we don't really need their permission to integrate with their protocol. Our DAO deploys capital to it and then ultimately does like a reverse auction that prices the fixed rates. So we'll probably just come out of the gate and integrate with numerous groups on Arbitrum. If we're successful and continue to grow TVL to a lot of these protocols, then there's absolutely ways that we can start doing extremely cool things. Like, I mean, one of the biggest things on Arbitrum is obviously GMX, right? And GMX gives us the ability to um, make things what you would call market neutral, meaning you don't have to put capital into a stable coin in order for the returns to function like stablecoin returns. You can use perps, futures, and options in order to even go into like an ETH BTC pool on Sushi and then hedge against it using GMX. You subtract the funding rate and then ultimately you take what's called the delta between what your returns are for providing liquidity to what's seen as a riskier pool. Well, we could work with GMX in that way to create that type of offering. So our immediate roadmap is probably get our DAO live, um, get these integrations live. The next thing would be working on this kind of merger with the Fiat team. And then by then, with some of the partners that I've been doing some pretty serious like business development stuff in terms of growing the TVL and network, then I think that we'll have size enough that we can get into what I would call more creative risk management strategies that our DAO would deploy and enable users to come into. That loose back of the envelope roadmap, though, is probably a year-long roadmap. I mean, stuff takes longer than you expect. So all that stuff I said, if we're successful, is going to take a year for us to do.
Awesome. No, yeah, I mean that's fine. Security and sustainability is key in my eyes. So no rush. Yeah, in my opinion. That being
Well, the
said,
integrations will get done this year. I'm just more saying the deeper, more complicated creative stuff. Like, yeah, I mean, you got to come up with that, code it, get audited. It takes a while. But that's good, right? Because like BarnBridge has never been hacked. like we were integrated with Cream. We told the users, this is a very risky pool. If the originator, BarnBridge is a money Lego, so we deploy money into other capital markets. If those capital markets themselves go down, there's nothing we can ultimately do about that. We can tell the users that certain pools are riskier than others, but the actual mechanism of BarnBridge, our DAO, all of our protocols, we've never been hacked. We've never lost a dollar of users' funds. So I think that going fast and breaking things has increasingly been proven not to work in crypto. BarnBridge definitely had a drop in our TVL when we dropped rewards. We can ultimately build that back up. But one thing I do think people know is that if they put money into our protocols, we have put an immense amount of time into ensuring that they're safe. And we see hacks every day, like knock on wood, I hope it never happens to us. But I would say that security is our first and foremost feature, even if it takes longer, because when large institutions want to come put money on chain, pedigree and time in market matters a lot.
Totally hear you. Yeah, again, always, always a fan of taking the time needed to make sure everything is safe and secure for the end user. In my eyes. But yeah, again, just to be cognizant of time here. I think maybe we can bring up a person or two. How does that sound, Tyler?
That works.
Awesome. All right, let me see who we can bring up here. Go ahead and raise your hand, by the way, if you have any questions. I think I see a couple people here already. Let's just make sure the questions that we're asking are related to BarnBridge versus Arbitrum. If you have any questions for me, you can always just spam me in the Discord.
Is there like a link for this that we can look at, like comments too?
Yeah, the bottom right there are comments. We can kind of go through them now. I'm bringing up someone actually right now as well. So, uh, Rayon, you have the stage.
Hello, can you hear me?
Yep.
Yes.
Okay. My question for BarnBridge is a lot of project like if they are a breach project, they suffer a lot for security purpose. Like a lot of breach have been hacked. So have they been audited or they are planning to do an audit for them to be safe for every users?
So correct me if I'm wrong. Like you can just say yes or no, but you're saying a lot of bridges have been hacked. So you're wondering if we've had like extensive audits so the users know that their funds are safe, right?
Yes, that's my question.
Okay. So we're called BarnBridge. I named it BarnBridge in 2019. I think before anybody really knew what DeFi was, back when I wrote the white paper. It kind of ended up being serendipitous because it was kind of funny, like yield farming, and it's a barn and we're trying to bridge this stuff to TradFi. But the real reason I named it BarnBridge is because I was watching Beetlejuice for some reason, and they had a barn that looked like a barn bridge. I found out later it's called a covered bridge, but I bought barnbridge.com because I just remember thinking that sounds like a cool name for this kind of concept that I'm working towards. It's like arbitrary. It could sound like a bank. So the truth is, we're just called BarnBridge because I was watching Beetlejuice one day. In terms of us being a bridge, we're not like a traditional L2 or L1 to L1 bridge. Arbitrum runs a bridge between the Ethereum network and itself. However, because it's a roll up, it adopts a lot of the security and it needs a lot less centralized trust in order for this stuff to work properly. So the question that you're asking is more of an Arbitrum question versus a BarnBridge question, but I can kind of answer it regardless. And that the reason we're not like going to another L1 over Ethereum, like one that could offer next to no transaction fees, that's normally because it's extremely centralized. So Arbitrum's been working for a very long time to build an optimistic rollup that bridges between Ethereum mainnet and Arbitrum's optimistic rollup. And ultimately, I think over time, the way that, well, this is a little bit of a diatribe, so I won't go too long because I know I've done it too much on this call, but I think that more things will stay on native networks and rollups to those native networks, and then mirror assets like what you get from synthetics ultimately are going to be a lot of the way that we trade in between, as opposed to us putting up $200 million to bridge from Ethereum into Solana. You ultimately have oracles do a lot of that work. And basically a lot of the trading still happens on the native chain. So I could have like an ArbSol token that allows me to trade Solana on GMX, as opposed to me having to bridge my money or have some massive Solana bridge into Arbitrum. That's ultimately what starts to get hacked, is those bridges that are holding these big funds of money so you can pull the money over and know it's one-to-one backed. I think that as an industry, I could be wrong, but the way I would extrapolate it is that the roll-ups on Ethereum are going to be where a lot of the trading happens, and these native assets on other L2s that are EV or L1s that are EVM compatible, those ultimately, you're going to be able to keep that money on that, and we'll use price oracles to enable trading on these other chains. But BarnBridge doesn't assume the bridge risk. I don't know how to say this without scaring anyone, but like at the end of the day, if Arbitrum goes down at that point, BarnBridge goes down too. However, I think that it is substantially safer than a lot of these bridge hacks you've heard about, because Arbitrum isn't another L1. It is a roll up to Ethereum.
Thank you. I really appreciate it. So, is it going to be like any other roll up can use it, like Optimism Citizen roll up are going to be like bridging with BarnBridge, or is going to be only on Arbitrum?
So we're on Arbitrum, but we're a DeFi protocol on Arbitrum that's called BarnBridge. We don't run a bridge. We're a fixed income DeFi protocol, an application that runs on Arbitrum, and a DAO powers that protocol that runs on Arbitrum, and that DAO will also be on Arbitrum. We don't run any type of bridge.
Let's just rename BarnBridge to just Barn. I think that's the confusion here.
Yeah.
Yeah. I think that's
Okay. Thank you. Thank you very much. I really appreciate it.
thanks, Ray.
Thanks for the question.
Yeah. Let me see. I think by the way, the best way probably to end off here, as we usually do, for those in the audience who do maybe want to ask any more questions, join the community, contribute to the DAO, all these great different things. How would you recommend them going ahead and doing that?
Wait, was that a question for me?
Yeah. Like someone wants to contribute to BarnBridge, how would they do so?
Yeah, the easiest way is Discord. So like, please don't come into our Discord and start asking questions about the token. Like, we don't talk about it. We're an American project. We're not going to talk about like pumping. So I just want to like warn everybody of that the mods will be strict. But if you're coming in to like learn about the DAO and how to get active in governance, it's like an extremely welcoming community. Also, like my DMs are open. Like I'm respond to people on Discord all of the time. Like I have ongoing AMAs. We're in the process of launching so much and under audits. I haven't done any in a while, but ultimately, if people want to get in touch with us and get in touch with BarnBridge, you can definitely follow us on Twitter. We give a lot of the major updates there and through Medium. But if you want to have like one-to-one interaction with our community, the one thing I think BarnBridge has done an excellent job of is build a kick-ass community that will patiently answer people's questions, especially newcomers' questions, or at least point them in a direction to, do some research.
Awesome. Well, again, Tyler, I really appreciate you for coming on today and giving us some insight on what BarnBridge V2, the DAO, and honestly, like all your other thoughts too, was very 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 insightful, especially in a time where I think conversation like this is really really important. But yeah, so for those who want to kind of jump into BarnBridge, as well as of course Arbitrum, make sure to jump in their Discord. Don't mention anything related to price because they'll definitely give you the boot for that, and I definitely understand it. And yeah, we'll see you guys on the next one. Tyler, again, thank you so much for coming on today.
Yeah, I really appreciate all y'all's time. Thank you so much, Hunter.